Achieving financial freedom is a goal for so many people. It basically means having enough savings, investments, and cash at hand to afford the lifestyle you want for yourself and your family, and a growing passive income that will allow you to retire early or pursue a career you want without being driven or worrying about earning a certain amount each year. Unfortunately, too many people fail to achieve financial freedom. They are weighed down with increasing debt, lots of financial emergencies, extravagant spending, and other issues that prevent them from reaching their goals. Then, there are unexpected events like a hurricane or pandemic that spoils plans and reveals holes in safety nets that weren't there before. In today's video, I'm going to introduce to you 12 amazing steps to become financially free this year and how to make smart decisions. Number 1. Set life goals. What does financial freedom mean to you? A general desire for it is not a clear goal, so be specific. Write down how much you should have in your bank account, what the lifestyle is going to be, and at what age this should be achieved. The more specific your goals, the higher the chance of achieving them. Next, count backwards to your current age and create a financial milepost at regular intervals. Write it down neatly and put the goal sheet at the very beginning of your financial calendar. Setting life goals would give you a sense of direction. It would give your life meaning and direction. When these goals are achieved, it gives you a sense of satisfaction. Number 2. Make a budget. Making a monthly household budget and sticking to this budget is the best way to guarantee that all bills are paid and savings are right on track. It's also a normal routine that strengthens your goals and prevents you from spending in excess. Having a budget keeps your spending in check and makes sure your savings are on track for the future. It is a very essential tip to take note of if you want to become financially free. Number 3. Pay off credit cards in full. Credit cards with similar high-interest consumer loans are dangerous if you're trying to build wealth. Make it a point to pay off the full balance every month. Student loans, mortgages, and similar loans typically have much lower interest rates. Paying them off is not an emergency. Paying on time will build a good credit rating. Paying off your loans early has so many advantages. You get to save money on interest, lower your debt-to-income ratio, and most importantly, you get peace of mind. Number 4. Create automatic savings. Pay yourself first. Sign up in your employer's retirement plan and make full use of any matching contribution benefit. It's also smart to have an automatic withdrawal for an emergency fund, which can be tapped for unplanned expenses, and an automatic contribution to a brokerage account or something like that. Having an automatic savings account is a good complement to your regular savings account. It allows you to deposit any amount of your choice into a special separate savings account at specified intervals. It is a very essential savings tool. Normally, the money should be pulled the same day you receive your paycheck, so it never even touches your hands, which avoids temptation entirely. However, keep in mind that the recommended amount to save is up to you. In some case scenarios, the achievability of this fund can be a question. Number 5. Start investing. Bad stock markets can make people question this particular tip, but historically there has been no better way to grow your money than through investing. The magic of compound interest will help it increase increasingly over time, but you need a lot of time to achieve valuable growth. Don't try to be a stock picker or trick yourself into thinking you can be the next Warren Buffett. Instead, open an online brokerage account that would make it easy for you to learn how to invest, create a good portfolio, and make weekly or monthly contributions to it automatically. There are different forms of investment. We have real estate, forex, cryptocurrency, and lots more. It's entirely up to you. Also, have adequate knowledge of what you are about to invest in. We all know that achievable financial freedom can be very difficult in the face of growing debt, cash emergencies, medical issues, and overspending, but it is possible with discipline and careful planning. Number 6. Watch your credit. Your credit score usually determines what interest rate you are offered when buying a new car or refinancing a home. It also has impacts on unrelated things, such as car insurance and life insurance premiums. The reasoning is that someone with a careless financial habit is also likely to be careless in other aspects of life, such as driving and drinking. This is why it's important to get a credit report at intervals to make sure that there are no incorrect stains ruining your good name. It may also be worth looking into one of the best credit monitoring services to protect your information too. Number 7. Negotiate. Many people are doubtful to negotiate for goods and services, worrying that it makes them seem cheap. Overcome this terrible mindset, and you could save thousands each year. Small businesses in particular are usually open to negotiation, where buying in bulk or repeat business can open the door to good discounts. Negotiation is very essential, as it saves trouble and money by resolving disputes in a short period of time and creates valuable contracts. Which of these tips have you found interesting so far? Share your thoughts in the comments section, and if you're enjoying this video, please hit the like button below. Rule number 8. Continuous education. Review all applicable changes in the tax laws each year to make sure that all necessary adjustments and deductions are well maximised. Also, keep up with financial news and developments in the stock market, and do not hesitate to adjust your investment portfolio accordingly. Knowledge is also the best defense against those who hunt and focus on naive investors to make quick money. Always make the habit of investing in yourself and educating yourself in finance. And also, learn to know the difference between the things you want and the things you need. Rule number 9. Proper maintenance. Taking care of property makes everything from cars and lawnmowers to shoes and clothes last longer. As the cost of maintenance is a fraction of the cost of replacement, it's an investment that cannot pass you by. Property maintenance keeps your property fully functional and operating in its best condition. This would also save you the cost of getting additional properties. Number 10. Live below your means. Mastering an economical lifestyle by having a mindset of living life to the fullest with less is not as hard as you think. Many wealthy individuals developed a habit of living below their means before rising to affluence. This isn't a challenge to adopt a minimalist lifestyle or a call to action to make you stop doing the things you initially do over the years, but making small adjustments by distinguishing between the things you need and the things you want is a financially helpful habit to put into practice. Living below your means allows you to save, invest, and build wealth. It means placing a higher priority on savings than you do on spending, and this is a great step to becoming financially free. Number 11. Get a financial advisor. Once you've gotten to a point where you've accumulated a decent amount of wealth, whether liquid investments or tangible assets that aren't as securable to convert to cash, get a financial advisor to educate you and help make decisions. This is very important if you want to make wise monetary decisions. And lastly, rule number 12. Take care of your health. The concept of proper maintenance also applies to the body. Invest in good health with regular visits to the doctors and dentists, and follow health advice about any problems you may face or come across. Many problems can be helped or even prevented with lifestyle changes like more exercise and a healthier diet. Some companies have limited sick days, making it a significant loss of income once those days are used up. Obesity and ailments make insurance premiums go up, and poor health may force earlier retirement with lower monthly income. This is why maintaining a good health is very important. It helps you save money by eating healthy rather than buying expensive junk food, alcohol, and other bad foods. Also, regular exercising lifts your mood and makes you feel better. These 12 steps are not enough to solve all your money problems, but they will help you develop healthy habits that can get you on the right path to financial freedom. If you got value by watching this video, give it a thumbs up. And if you would like to get more information on healthy habits and principles, subscribe to this channel and turn on post notifications to get notified when we drop another video.